has the property market changed since the start of this pandemic? Because MCO, CMCO, RMCO, how has things changed?
Now, to answer your question, we do a consumer sentiment survey biannually, twice a year, in order to really get the feedback from the ground. However, in H2 2020, we prioritized the insights into how COVID-19 has impacted Malaysians and the way they seek property. So we engaged over 1,000 respondents over an online questionnaire. And in terms of how that has changed, like many segments, property was deeply affected by the MCO period, particularly because of the halt of viewing, sales and construction activities were halted. So the Malaysia, coming into the year, we were already down in terms of sentiment by 2% from Q4 2020. From 44 to 42%. And the sentiment in H2 2020 further went down by 39%, obviously not unexpected. But the good thing we're also seeing is we're also seeing a recovery in terms of interest. So while sentiment is down, market conditions may not be as positive as how the consumers would like it to be, but we're seeing genuine interest in people really wanting to find property. We see this through our traffic. Throughout the phases, the traffic has been gradually increasing. It went down all the way to 24% compared to pre-COVID periods in phase 1, went down and then further climbed up to 19% and then now 18%. However, in June, I must say, organic traffic has increased by 77%. Oh. So clearly people are just looking for opportunity, and the market conditions are right for potentially good opportunities as well, right? So yeah, that's really the one of the major findings. In terms of opportunities, where we see segments of consumers that are really confident in terms of making their decisions to potentially transact are, funny enough, the group of renters. So people who are renting now realize, actually, I want to own a property. 51% of those renters that we surveyed said, look, I want to go into the property and potentially transact a property. And also the younger demographics, which is 22 to 49 years, basically saying, look, we also want to come into the market and want to transact in terms of property.
Now, we always talk about the property bubble, and it's not just in Malaysia, it's globally. Has this pandemic kind of burst that bubble? Was there a bubble to start with? Because it's always about prices and changes in prices, property prices going up and down. Any changes?
Absolutely. So it's, one thing I'll say, it's difficult when it comes to property and you want to relate it to a property bubble because there's different definitions and criteria that people apply to them. However, I would say the usual characteristics of a bubble is obviously high price, low supply, and rampant speculation, right? But in Malaysia, we've got a variety of affordable homes and financing programs that exist, as well as a residential overhang. And one thing's for sure, Bank Negara Malaysia has always been prudent in its measures in order to curb speculators. And therefore, this eased the fears of a real estate bubbles. Now, with regards to prices, the impact of the pandemic, obviously, based on NAPIC's data, we only see the real sort of Q2 data in the coming months. But for Q1, transaction was down 14.3%. Now, this obviously, is an average, but the impact of prices will also depend on the property type, right? But if you look at historical data during crisis periods, terrace homes and high-rise projects tend to hold their value, but the larger properties like bungalow or semi-Ds tend to fare poorly. And we've got this data from our house price index, the Malaysian house price index wrote from 1995 to 2001, and you see similar trends as well. One thing's for sure though, we already, you can already know or sort of know from common conversations that there are opportunities because there'll be willing sellers and willing buyers who want to sell fast and unlock liquidity from their assets, and therefore there's an opportunity in the market. And if you relate back to our search, JD, what's interesting also is people are now searching for prices between 500,000 to a million. Now, normally the affordable range in Malaysia is somewhere around 300,000 to 500,000 in general, right? But we're starting to see the surge comes in terms of price of 500,000 to 1 million. Now, this, could be attributed to more of a window shopping characteristics. They're trying to find opportunities. But it just says one thing though. All these demographics are aspiring to own a home and own greater homes. And the other interesting fact I can share with you, JD, is, when it comes to changes, it's the kind of features that they're looking for, right? And these are quite strong in terms of the current conditions. So we have, the main searches around lighting, natural lightings, internet connections in those areas, more larger space. So for terrace houses, for example, we've seen a rise in 3-story terrace houses rather than double stories, right? Additional space. Now this could be a work from home,
Exactly. Yeah.
characteristics, right? Yeah. So some really interesting data coming out. Although market is down, but there's genuine interest in terms of people, coming and looking for properties.
Now, would you say that at this particular time, that property prices, would you say it's volatile, that you don't know, one moment it could be up, one moment it could be down? Is this the right time to buy, and why?
That's a very, very good question. In fact, that's one of the most common questions we get all the time. And I normally associate time with purpose, right? So to answer this question, obviously, you got to ask yourself why you're looking to buy. Now, if you're just a general home seeker, there's obviously a lot of potential purchases out there. People are affected by employment or income loss. They will be prioritizing day-to-day survival and not looking so much at property.
Yeah.
So if you cannot afford, don't buy now. Don't try to jump on the bandwagon and say, hey, I want to try to, invest my money somewhere else. No, day-to-day is your first priority. Now, if you can leverage, then you also got to look at, whether you're looking for an investment or for your own stay. Now, it also differs by age as well from what we see, right? So, like I said, there's 47% of our younger segment of audience said, look, they want to come into the market. So for younger seekers and even the 51% of renters, despite the traditional view that, younger generations are generation rent, they want to come into the market and buy. So the time may be good because of the conditions of the market. There's a lot of incentives out there in the market, right? For example, the HOC campaign, the RPGT waiver, the waiver of your loan tax, etc. So these are the conditions that will enable people to sort of take action. And obviously, last but not least, is the interest rate is at an all-time low. So yes, conditions are good depending when you want to buy. Now, I would say for investors and for the most seasoned buyers from our survey, they tend to sort of wait out to see what the actual play is going to be in the market and not act too soon. So these people probably will not act now. They probably see and wait as to, if the market condition changes for the better for their purpose.
Right, because it might not, number one, might not have bottomed out yet, right?
Exactly.
Right.
Exactly.
Now, earlier you mentioned about the incentives. Now, with so many incentives to buy, because I'm in the market right now, and you're absolutely right, because I'm one of the 51%, because I've been renting, because I've been quite content with that. But now I'm like, hey, you know what? Prices are really good, though, because I'm thinking of it right now, right? And with all the incentives right now that's out there to buy, how do these incentives affect the price of property? Because some developers, they had cash back for renovation costs, some even like fully furnished and everything. How does that affect price of property?
Okay, so that's a very sticky conversation when it comes to property price. I mean, look, national incentives like home ownership campaigns enables price to come down, right? Because in order to qualify for the program, they got to give 10% lower than what they originally submitted as a price. So developers cannot easily revise prices, right? Because they've got their relationship with the banks, which provide financing both to the home seeker and their projects, right? So they obviously rely on other incentives, as you rightly pointed out in the past, which is cashback, renovation costs, etc. But it's not always reflected in the purchasing price at the end of the day. But incentives like HOC does push the prices down, and like I said, in this case, minimum 10% discount. Aside from that, because of all of this, other participating, non-participating projects and other market players may also look at bringing prices down. Also because the fact that these are the current prices that are going out there in the market, so they've got an ability to match that. However, given historic data, right, and I always like to make past reference to know what potentially is going to happen, in the current situation. Now, based on the absolute worst case scenario, which was presented in 97, 98 financial crisis. And, just after that, there was a Nipah virus outbreak as well. So fairly similar time, we saw prices decline by about 9.8%. So you can see this is in tandem with the 10% that we anticipate will fall as well, based on our Property Guru property market index. So we definitely think that this is going to be sort of the trend we see, because that's the past. Now, would that be for certain in the current times? We don't know, but that's the best reference we've had in the past, which is the worst crisis we've gone through.
So will it affect, because right now we know there's a lot of incentives for people to buy homes, and you might want to buy it. I'm just more concerned about price of my property or price of property later on. What is there going to be a ripple effect in the near future?
As in prices go up or go down?
Yeah, either up or down, or it does not go as high as you think it might.
Yeah, so the good thing about, the incentives that I mentioned, and one thing good about what Bank Negara has done is they've curbed speculation in the market, and they continue to do so. And that's obviously kept prices very, very stable in Malaysia. In fact, we've got a very stable property market, as opposed to maybe neighboring countries like Singapore, where there's a lot more volatility in terms of prices. All right, we've been tracking the Consumer Sentiment Survey and also the Malaysia Property Market Index, which is basically asking prices for property. So that's like real-time data, because we only get transaction data maybe after 3 to 6 months. So based on that, we've actually seen a decline by 10%. But again, this is very moderate given the trend that we've seen over the last 10 to 20 years, right? So to answer your question, in a nutshell, Malaysia property prices have been fairly stable. Therefore, it becomes a very good investment, obviously for investors, but at the same time for home ownership as well. So you don't tend to sort of, worry about, am I catching it at an ultimate high or an ultimate low? It's fairly stable.
Exactly, because that's my constant concern, right? But I'm caught in between properties that are just being launched, properties that are launched already, and then they're in the midst of being constructed, and also like, maybe I might want to get a second-hand property. So how is the second-hand property market doing post-COVID-19?
So fairly similar in terms of, challenges. One of the key challenges is, people can't go out and see the property. And I think, for second-hand property, inspection is obviously one of the most important things to do before you purchase. So in recent times, actually, what we've launched is virtual tours. We've collated all the virtual tours that we've had on our site. We've been gathering for the last 4 years. We sort of dedicated on one side, and we've particularly seen that become more and more prominent, particularly with the younger demographics. Clearly, these are more tech-savvy individuals, right? So secondary property is not spared. I think the difference between primary and secondary clearly is you've got a ready built property, you've got to go and inspect it and obviously be very comfortable with your purchase. Whereas for new properties, you rest assured is built by a developer. You're going to get it new, you're going to get it ready in time. But one of the interesting factors that really became priority for property seekers when it came to new properties, according to our sentiment survey, is the reputation of the developer.
All right.
So that's also very, very important.
But are there more secondhand property prices? Are there more secondhand properties available now? Because people have been like, oh, I got to let this go because I can't afford to pay for the loans or whatever it is. Do you see has it grown? And especially for people like me, because I'm looking for a secondhand property.
Yeah. So
is there a lot more now?
Inventory has come down pre-COVID by about 4%. This is according to NAPIC's data in Q1 2020. We expect to see a similar trend, but there is one element in the Penjana scheme that could open up new opportunities, which is property financing for the third properties. That's one option. Second is obviously the waiver of RPGT, right? So those who've been sort of holding because of the tax, that potentially have been a blocker. We've got a time period to act, which is until the end of 2021, to unlock their liquidity from their assets. So this could bring out new supply into the market that we would have not normally seen. Right. And this, will present good opportunities as well because, some owners may tend to forego the potential tax they would have paid for by further reducing the price and therefore have a willing buyer want to take up at a good opportunity.
So this is a good market for investors.
I would say the conditions are right. Right. So, the current market volatility is actually ideal for investors because it presents the possibility of asset acquisition at a low price with a high potential for appreciation if you have the holding power.
Yeah.
So, if you look at, the financing and the regulatory environment, right, it's more favorable than it has ever been, right? So it's very, very low interest rates given the, overnight policy rate of 1.75%. That's the lowest it's been. High liquidity in terms of statutory reserve requirement at 2%, which is what the banks hold in terms of lending.
Yep.
RPGT exemption from 1st June up to 31st December 2021. This is where I said the time frame to act. And an upwards review of 70% financing margin limit for third residential property valued at 600,000 onwards, right? So these are all the incentives that are out there. So in our survey, when it came to investors, as anticipated, there was an increase in investor appetite in H2 2020, which was from 47% in H1 2020. It's jumped all the way 6 points up to 53% in H2 2020. But however, I would say this, investors are most likely to delay, and that's what they shared with us, their purchases, to gauge the market and price movements. They are eager to buy, but they're waiting for the right movement. Yeah. So in summary, the environment is like a playground for them, right? For long-term investors, because they know they may purchase, but their investors always think about ROIs, which is in the short-term rental returns, in the long-term capital gain, and rental returns may be challenging in the near term.
Yeah, because I know this for a fact that some property prices, the rentals, which were even maybe 6 months ago, maybe, let's say 2 years ago, was maybe 3,500 a month.
Yes.
Now they've dropped it down like 2,000, 2,500. I'm like, wow, you can drop it that much. So if I was paying for an installment for my loan, how scary is that?
That exactly, and that's why the moratorium was very welcome, right? And I think you've heard a lot more, sort of coverage in the news around the potential extension of moratorium. But we now know that's not going to happen. Yeah. And just touching on that, a very interesting point as well is 54% of our surveyed participants decided to opt out of the moratorium. So again, responsible borrowers, right? They didn't feel the need to. They felt like, this will help me better manage my finances, but I'm not going to opt out. Then again, as the finance minister shared, the cost to the banks are pretty heavy. I think it was in the range of $50 over billion or $100 over billion. So I can't get my figures accurate on there, but what was pretty sure was, it's sort of impacting the bank's business, and I guess that's why they were talking about more targeted approach as opposed to a blanket approach to the moratorium extension.
So Sheldon, I need some advice here because I'm seriously looking at buying right now. And it's funny that you mentioned like some before we were looking at 300,000, but now between 500 to 1 million. The only reason why I did that, where I'm looking at higher prices, because the 500,000 properties now used to be 700,000 before. And I'm like, wow, it dropped so much. So I'm very interested, but those are only for secondhand properties I'm looking at. But I'm also open to brand new. So is it better to buy brand new or secondhand?
So again, I will always say, you would know the answer to that question best because the purpose, right? Do you need a place to stay now? Do you need a place to move in now? If you can wait, then clearly your options are a lot more wider because you've got the potential to go for a new property. But there are certain folks, unlike you, who maybe not, who can't, right? Yeah. So they need a property now. They can't wait for the new launch in 2 years or 3 years to be completed. So if your options are open, then you would do the other normal thing, which is first make sure that you have, your finances sorted, so you can afford it. Think about the longer term as well, the commitments, right, the monthly installments, and then you go through the, the property type which suits your needs. Like I said, typically 2-story terrace houses would be the norm. But we see the increase in 3-story terrace houses, right?
Yeah.
So people are going for more spaces, right? People want more natural lighting. That's what the survey says. They want to make sure internet connection there is available and stable. It's good. IoT, right? So So these are the criteria. And again, if your options are wider, you will then question this to the new property developer or to the current homeowner, clarify all these and say, which is the best option for me, my purpose.
Right. This is great because I'm constantly I'm constantly torn over what to do. And you're right, because of MCO, I'm actually looking away from a condo. And I live in a pretty okay sized condo, but at some point I was like, wow, you know what? I need my space, and I need a space for my pets to run around. So what's your advice to people like me, to potential home buyers in this post-pandemic Malaysia?
I would say first is, because Malaysia has always had this fundamental problem of affordability. And I always start off by saying, first know what you're getting yourself into. So make sure you're very well versed in terms of your financing options and what do you need. Do you need a down payment? How much would that be? What are the hidden costs behind it, etc.? But again, there's, given this time post-MCO, there's a lot of incentives in the market that you can take advantage of. So do your research thoroughly. If you go to propertyguru.com.my, you'll find a news section, you'll find a content section. In fact, one of the key take-up in terms of content that we've seen in terms of traffic surge was around financing. So clearly people are starting to take that financing awareness a lot more stronger. We've also launched this product called Home Loan Pre-Approval. What it does is it helps you qualify how a bank would normally qualify you with your CCRI score, etc., and know how much you are able to borrow from the bank. And this is all done real time. There's no cost to it, and it's fairly easy to do, which is something that we use technology to enable it. So I encourage you to do that. Then obviously I would say, really sit down and think about your purpose. What do you need, right? And factor all these. There's no rush into making these decisions. Typically a property seeker will take anywhere between 6 to 8 months from the first original thought of buying to actually transacting. So you need to take your time to do your research, do your shopping properly, make sure you've got your purpose written down accurately so that when you go and see the owner or the developer, you're able to cross-check that this is the property that is suitable for me. And it could vary, right? I've got a car, I don't have a car. I want to dispose my car because I want to lock up more commitments for the property or, release my commitments so that I can spend more on buying a property. These are all the things you do. And when you have your answers, you will then be able to enjoy this journey of property seeking and property ownership. It's just that when you don't, and you go and you're trying to find out answers on the go, you will end up having a bit of a challenge because property is a very, very hard and painful decision to make. So do your research, be very sure, enjoy the property seeking journey. Property Guru has done a lot to sort of enable that. We've got content, we've got tools, we've got the home loan pre-approval, we've got the most number of property listings, so 450,000 worth of choices there. You can filter those and then make that ultimate decision confidently.